Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for January 4th, 2024. Start with the hybrid swing portfolio, as always, with Alcoa, 30-minute charts. As always, this yellow box represents today's price action. This blue box represents the 5-day price action. The light blue is always the 10-day box, so this is actually showing the 10-day low. Is anybody else having a challenge with sound? All right, so today Alcoa short on the PSAR flip, and then took a half an hour loss when it refused to fail. AI took the PSAR flip this morning, micro gain, but I'm really anticipating some potential for tomorrow. We have this turning point. This is what regret looks like, by the way, not taking that trade and then missing that swing. We got pieces of the second leg. I mean, we got it up, we got the first leg down, a fraction here, a fraction there, but the overall turn here where it crosses the Bollinger Band mean now says we may be able to get to here tomorrow. And then if that works, leg two gets us back up into here. So this normal sell-off at the start of January is kind of typical behavior. And what will be interesting tomorrow is to see if this 2-day consolidation actually holds as support. And so if we get a move off of this base, and you're going to see that in a lot of symbols today, then that's going to be what a typical buy strength on dip looks like. Because on the daily chart, you'll see later that we've had that nice run up in December. This orderly pullback finds some support. This is enough of a sell-off to trigger all of the channeling and overreaction signals. And when that holds, that gives us a nice cotitude kind of an entry on the daily charts. So the market is poised for that. Friday is typically a tactical day, and that might be the first day of a recovery, and then next Monday being a stronger continuation. So we'll see. Amazon. Tried a bit of a morning hook today. We had the gap down, and this happened a lot. We're going to see some opportunities today where closed here, gapped all the way to here, harsh sell off and reversed to here. The next bar opens and starts. So I'd try that when it crosses the VWAP, get this move to the edge of the dragon, which stops it, and then it starts to fail. I give it about an hour. I don't let it go negative, so I'm able to capture this little no lose plus dinner for two wedge. Ended up giving back this much, but the intent was to see if it could come up here and close the gap, get through the dragon, get past the Bollinger Band mean, then go. So there's a lot of layers to that, and it's Amazon, so it's not going to zero. And I stuck around as long as I could, and kept it positive, which is good because then I missed this move, which closed poorly. But the main point is there was an opportunity after the gap sell off. That's a scenario. That's morning hook. And the intention was to try to get that, but we kept it in the money and didn't lose money on the trade, gave it a chance to work for us. All you can do is give them a chance. Caterpillar. Kind of the same trade, only Caterpillar's better because yesterday's close was here. It had no gap. It just immediately moved up. And then when it crossed the dragon and now the dragon is rolling up, that's an SSC entry. Gets this far. When the RL10 rolls over, I take it at the edge of the dragon. So we get about half an R. It also closed weekly, but in this case, it held above the PSAR. So I still have, I'm looking at this region here as a chance for it to go higher. As long as this PSAR is holding, then I'm entitled to have a upward bias. The collapsing dragon entry is down here where the PSAR originally stopped and the RL10 flipped. So this would be no man's land inside here. That's you'd be front running the collapsing dragon if you did that. That trade is legit, by the way, because what you're looking at is a sell off, a recovery, but a lower high. So an entry in here to go short tomorrow would be a COTA 2 to the downside, and then that gets reinforced here. If this support lever fails, then you're into the collapsing dragon. So that's a scenario. That is the most basic standard pattern that we use. I would say 90% of my decisions are just exactly like that, and lather, rinse, and repeat. That's what a standard trade frame for our foundational patterns looks like. Commit that to memory. Cliff? We get the this is a COTA 2 entry short. So here's the move down, bases right there. There's your SSC entry. It comes up and checks in at the Bollinger Band mean. It can't make that move. It rolls over. When that rolls over, now suddenly this sign here was, if I had been long here, that would be where the exit would be. That's also an opportunity to go short, by the way, because when you say there was a speculative long, but it didn't work, that now makes the trade in the other direction more attractive, especially when the previous move was like this. So this is actually a legitimate place to get a short entry at the skin of the dragon after that RL10 rolls over. Or you could get it here where it emerges through the dragon and the dragon has now rolled over, or where I took it where the PSAR flips. That's a more conservative entry for the COTA 2, standard risk box. This is where that collapsing dragon was, but because I already have that position in, I'm not getting short here. And now when this does not fail further and just comes back by the close of the day, that's not the sign of a panic sell. That's just a tactical trade. So I'll just collect that win, which is about plus 1R compared to that risk. That's 1R in hand, no overnight risk. And now I can set this up as a compound critical state. There was one effort. It failed, but it held support. That establishes a nice base. And now there could be an SSC here tomorrow. And if it breaks above the daily high or the peak of the RL10, then this is emerging dragon area. And then up it goes. And then the target would be this little consolidation area or the peak of the dragon and the RL10. So that's the, target 1, target 2, target 3 for tomorrow. And then if we have a standard risk box, you can see that we've got 1, 2, 3R to target 1, 4R to target 2, 5R to target 3. So it's going to be good trading tomorrow on Tactical Friday. CVS, boy, was this interesting. So here was the close, here was the gap down, and then it dropped like a stone to here, and then reversed to here. And I just took this as a 1, 2, 3 entry. So there was an opportunity trade in here. But on the 30-minute chart, I wait to see it get through the VWAP and a 1, 2, 3 entry, standard risk, give it a chance, and then the R10 rolls over. So I just take it near the end of the day, capture +1 against 1 unit risk. That's in play for tomorrow. But this was that was some high adventure in here, let me tell you. Yeah, I mean, you get what the gap down and immediately dropping like a stone creates an alert. Like you can't miss that because it's at the top of the stack of worst performers as it's failing. So when this turns and it turns at a support level, you can see that this is all, it went from, the middle of the Red River and it breaks down into the winter. And now this is postured right at the 0 line in the spring, ready to go. So this could have all been a head fake and just collecting inventory. And remember, we've already seen one group of people they couldn't wait to buy this. And then all this did was probably chase them out of their positions and transfer the inventory. And now this thing it's holding steady here, well above where it closed the year at. So that's actually pretty favorable. And you can see that reflected in the Bollinger Band mean, which is still right in here. So this thing is at fair value. And that could be a nice move for tomorrow. And I just don't have any overnight risk. And I have a little bit of markets money that I can put right back into it. But why take the risk overnight, given the size of these gaps in the last 2 days? Why hold that one overnight? No sense. When the intraday move is plenty large. Disney had a great big gap and sell off, and I no time for that. Devon Energy, beauty. So Devon Energy is one that we did hold overnight from yesterday. So yesterday's little 1, 2, 3 entry, and this is an example of that finding support at the Bollinger Band mean in a 1, 2, 3 reversal intraday. And really, if you were short here, taking the exit at the skin of the dragon because the short side trade is over actually gives you the early entry into the long side trade. So that's the one we took yesterday because energy was recovering and it made a nice move and it closed right here. So we held that because we had that cushion of 3R. It started to sell off. So I cashed this one and I risked that one. It sold off. I get to keep 2. And then when this continues to fail and falls through the Bollinger Band mean and flips the PSAR, I take the short and it just works in our favor. And so against that little standard risk box, we're holding +2, and that closed so poorly and energy was weak. That feels like one that I want to hold overnight. Because if this fails, it's coming all the way back to here on an easy test, and that's probably another 2R. But if it starts to reverse here, like it did here, I'm not going to stick around. I want to try to preserve at least 1R. I'm going to give it at least 1R buffer, but I'm holding out for the chance to get 2. Then if it fails below here, that'll be the trade of the day tomorrow, and I'll be piling on. So that's some scenario trading, and I'm rehearsing for tomorrow's trade as I review today's trade. Check or hold. Electronic Arts, no, this was no trade. This is emerging markets. Tried the Kata 2 short. This is one where we have a big move down, one recovery, and then it fails and starts failing again. So I treat that as a like a Kata 2 there, or a collapsing dragon. The real test is here. It didn't fail further. I don't like holding EEM overnight because as you can see, it is typically a big gapper. So I only like to 90% of the time, I'm only trading that intraday. And this gave us almost an R right here. And I'll just make bank and be ready for tomorrow. Ethereum. This was a continuation today. This was yesterday's gap down 1, 2, 3 trade. Today it opened here and then ran all the way up. I just had span of control issues, didn't get it, and then spent the rest of the day in a sideways chop. This is ready to break in either direction tomorrow. Any break above the peak of the RL10, and call that, basically at $20, is going to be very favorable. Then if it can get through this peak at 2030, it's good. And if it can get above 2075, it's great. So compound critical state ready to play, slightly long bias for that tomorrow. Mexico. The big, beautiful slide continues. Held a little bit of support here. Yesterday's continuation trade we held overnight. We actually got 2 trades on that yesterday, you'll recall. And then we held this one overnight because it closed here. And then the slide continued, but then it didn't fall further. And that felt like a 5-day sell-off in EWW Mexico. So I was just happy to cash 1, 2, 3R. Let me just put 3R in the bank and then get into the conceptual zero state for tomorrow, ready to trade a reversal or a continuation with no directional bias. Standard work in Mexico. His running buddy, Brazil. Brazil is a couple days earlier into the recovery phase. This was a big gap down, morning reversal entry. It ran all the way up and I held as long as I could, exited at the VWAP for about a third of an R. It didn't fail further, so now this is feeling like it's trying to put in a base. So if we get recovery in global markets, this could be a really nice trade with the first target aiming at 34.60. Check or hold. We spent about 45 minutes working our way through the math on that one in the foundations course Q&A. Standard work. Intel. Big gap down. This feels like just washing out all the weak hands who are scared by this because it gaps down to here and then all the buyers take over. So we joined them when it took out the opening and then reversed. Standard entry, standard risk. It ran all the way up to the PSAR, could not break through the PSAR, could not break through the Bollinger Band mean. And as that started to decay, I took the exit here instead of letting it cross to the VWAP, and we got to pocket 4R on that one and postured for a continuation tomorrow, because now that feels like an SSC setting up for tomorrow. But if it fails through today's VWAP, I will be short at 46.50 with a second position if it fails below, say, 45.50. That's going to be in play. That's maybe my number 2 priority to be ready to trade that one tomorrow. IP. I think that was no trade. Yep. IYR real estate. Tried the morning hook, took a fractional win. Coca-Cola, we closed a 3-day. This is the third day of this gap and go. Day 1, day 2, day 3 peaks early and then starts to fail. So I cash it when it crosses the VWAP, as it hits the PSAR, as it hits the right. I mean, how many signals do you need to say that that thing is over? And then it closes poorly. I mean, this is ready to drop tomorrow all the way back to here. And if that fails, all the way to here. So Coca-Cola, enjoyed you, but moving on. That's what a 3-day series looks like. Regional banks, morning hook, fractional gain. Mattel, um, morning hook. That's almost an afternoon hook. This is a case where you get again, you get the R10 reverses, and then I make the entry at the skin of the dragon, which is where I would be exiting if I was short here and it reversed. That means the short trade is done, which means that it may be time to speculate in. So I speculate in and half an hour, little fraction. This is a case where, as you get proficient on your streamlined set of indicators, now suddenly the shape of the dragon and the skin of the dragon becomes an important boundary for me. This is a great exit for anything short, but that also means that this region sets up a potential tactical long on a reversion to the mean trade. It only got halfway and back, so take a little fraction, get paid for having a little bit of joy. And then if it gets through the Bollinger Band mean, now you have some evidence that this could work with the intention that this thing wants to get back to 19. So trading those transitional states. McDonald's made a mistake and started talking about bad business while the market was open. And so this little move that was working nicely, I think their CFO started talking about troubles in the Middle East, and then that went from 297 to 291 in about 5 minutes. Yeah, a Mick mistake. He should Mick shut up. You're going to see this one as a nice trade of the day, intraday, on the sniper. But I'm doing no swing trading on that one. But this is pure opportunistic trading, intraday. So we'll see that one when we do the sniper trade of the day. That one's number 1 priority for tomorrow. Merck, closing out a nice 3-day move. So Merck gives you this breakout, leg 1, leg 2, not quite as strong. Today, leg 3, I buy the continuation above the peak of that's an emerging dragon. And this leg is the smallest and starts to fail quickest. So I just get out of it. Notice big leg, medium leg, small leg, and now it's probably done. So tomorrow, if this starts failing, flips the PSAR, makes a new low, gets through the Bollinger Band mean, then target 1, target 2, target 3, target 4, and lather, rinse, and repeat. Support and resistance all the way down. But if it fails to break through and starts finding support, then these become potential levels for Kata 2 support, because you have this support level. And if it does this, reverses and starts to go, now you have Kata 2s all the way up. And it has to get above, it looks like about 117.20 for it to be really new money and new buying interest. So we're now into the tactical trading on McDonald's, or on Merck, excuse me. Microsoft, believe we took that short. Yep. short after the PSAR flip and then crossed the Bollinger Band main and waited a little bit long for that. And then took an R out of it. It held, maybe it's going to hold support here tomorrow. If tomorrow is a good day after 3 days of selling this week, then this would be a logical place for the buyers to come in and start marching it north. So I'm happy just to take 2R out of it from the intraday trade and ready to just trade following the price tomorrow. Lather, rinse, repeat. Marijuana, gap and go. Nice run up. Kept an R. Nike, screw those guys. NVIDIA. SSC, supported spring crossing, crosses the Bollinger Band main. Spring turns to summer, but then starts to fail. So I take the exit at the skin of the dragon for a third of an R. But it closed above the Bollinger Band main and the PSAR is rising. So look for strength. If tech is strong, that's going to be a buy on dip opportunity. Clean energy, nothing. Rivian, nothing. The S&P closed very poorly. Fireworks tomorrow. Treasury sold off today. No trade. Tesla drifted south, but no panic. No trade today. Walmart, the collapse through the belly of the dragon. PSAR flips, Bollinger Band mean reverses, belly of the dragon fails. That's all I need. The confirmation occurs when this fails. That's the true. Either one of those is classified as a collapsing dragon. Here was an opportunity for a second position, but I'm content just to cash that one and have no overnight risk for 4R because it's right at a price level where the buyers came out of the woodwork and ran it all the way up to here. So we shall see tomorrow. Walmart, opportunity tomorrow. Priority 4. U.S. Steel, no trade. Sniper trades of the day. So here's one. I've got a nice, here's the opening right here. Oscillates into a sideways quiet channel Z3 pinch. Here's your PSAR flip. There's a long position, standard risk box right here. Would I be willing to go short from there? 100% yes. This would be confirmation that that short move is going to be large. Is if this breaks, I'd like to somewhere in here add a second position if it fails. On the upside, it has to get above yesterday's VWAP. And that's probably, the 2R battle drill is somewhere up in here. It has to get above that to really be useful. So this space here is the tactical trades in this region. And all I'm trying to do in the tactical space is get my risk out. So if that breaks, if this is breaking north, I just want to, at some opportune moment, get my stop above my entry, which is here, so that I can lock in some little gain. Check or hold. Now, how high, if this is the low of the day, how high can this thing go? What is the maximum reasonable? Intraday move is take the low of the day and add a range stat, and that gives me the reasonable upper limit. The size of this little R10 box, 10 times that is equals the range stat. Because to come up with this box, we take the range stat and divide it by 10. In this case, it nice and conveniently equals the size of the PSAR flip box. So there's something precious and beautiful about that. There's some mystical, deep order to the universe that is in play. So there we are. What is your intuition telling you about this? You know, put the letter U if you think it's going up, put the letter D if you think it's going down, put the letter O if it's neither one of them. You don't feel a strong way either way. And then you might say, what is it about this that if it's up, I see some ups, what might cause it to feel like it could go up? Well, if you feel it could go up and then you were looking for an explanation, now you're curve fitting and data smurfing, and you would say, well, obviously it's going to go up because I have a kata 2 kind of a formation, and it's broken through the dragon, and the dragon is just starting to hook up, and this is not much volatility, and it did not fail after an early morning sell-off. So failure to fail further makes me believe that it wants to go up. What makes me believe it wants to go down? Well, yesterday, we're still below yesterday's VWAP, and now we have a low, or we have a high, we have a lower high. And so if this rolls over right now, this would be kata 2s all the way down, and now it feels like it could fail. So that actually makes this a compound critical state, because I can make a strong argument for a large move in both directions. What makes it interesting is that it's already an hour into the trade and it hasn't moved hard in either direction yet. And yet we saw other symbols today with huge gaps down and sell and huge reversals. This is the opposite of that. So this makes me want to trade it a little bit, maybe. Maybe it's going to be a quiet, orderly move. All right, by this time in the trade, my initial stop was here. I've got 2 PSAR dots, and the third dot's going to be right about here. My maximum favorable excursion is up there, which is about right around the 2R move. The R10 is starting to be influenced by that little sell-off to this doji is enough so that the PSAR, or so the RL10, instead of moving straight up like it would have, has now started to flatten out. So now I should be thinking about stalking my exit, all right? Especially because I have this nice orderly little doji. That is a sign of perfect indecision. Why do I say that? Well, because it looks just like this one. When it broke out and then stalled, here was the first test down and back, and then it's in this doji, and you get a small little range where the close was equal to the open. And so that is a perfect little doji. It says, I don't know, what's it going to do? So you say, well, if it breaks north of that, then that's good. If it breaks south of that, then that's bad. And if it breaks down, it goes through the dragon, the spine of the dragon, the belly of the dragon, to the Bollinger Band mean where the VWAP is, to the belly of the PSAR, to all points south. You're heading towards the city of New Orleans. But it didn't. It broke to the upside. Nice. And no, it opened low, closed at the high, opened where it closed, was all signal, strong, all signal, strong, opened, ran all the way up, reversed, and closed at the low of the day, or at low of the bar, I should say, excuse me. So that actually feels like this. First little bit of selling pressure. You would not be wrong to just cash that one at the previous low of the previous bar. Nothing wrong with that. That's 2R. So we're at the 2R point now, and now we have a doji that has that same characteristic. Like if it breaks higher than that, that's tentatively good. If it breaks below that, that's bad. And now I have the upper skin of the dragon. So if this starts to fail, you can see that the R10 will have rolled over, and now that makes the upper skin of the dragon sort of my standard exit. So I don't mind having that exit right there. So the choices for where to put an exit on this would be 1, at the low of that bar, 2, at the skin of the dragon, spine of the dragon, lower skin. So that's 3, that's 4. PSAR would be 5. You're not going to let it get lower than the PSAR because you got to decide how much of this maximum favorable excursion, which used to be that much, how much of that are you going to keep? I have to keep at least that much because I'm certainly not going to let it come all the way back to the Bollinger Band mean, which is the least surprising move of all. When you get a statistically large move, an abnormally large move, 3R in one burst, then a reversion to the mean is the least surprising move. And the mean is the Bollinger Band mean. So a move back to this level is the least surprising move. So since I took this risk on the breakout, I cannot allow myself to not get paid something, no lose plus dinner for 2, for taking on that risk. And especially with being plus 3R at one point in my young life. Now, because this was a surprisingly large move made by traders, maybe I should be thinking about trading the move back to normal. And it's already right here. And if my risk was going to be the top of the RL10, now I can start thinking about not only placing my stop somewhere, but saying, where do I get short? If I'm going to get short. So I could stop and reverse right now. So let's call that A, B, C, D, E, F, and G. So before I ask you where you want to place your stop, where would you want to get short on that? Let's say you're not into this trade at all, and you just got an alert, and you're scoping that out as a potential short. Where would you want to get short, with the idea being that it's going to at least come to the Bollinger Band mean as a target, but we're going to play for a test on target 2 of this support level. So G is a reasonable target, F is a reasonable target, and price is at A. Well, if I get short at A, my manageable risk box is this. So that means it turns out that that's That's a frameable trade right there. And in this case, I would say if I get short at A, but it makes a new high of the day, then the short is over and I'm going to stop and reverse and go long. So I've decided in my mind that this is a reasonable place that if the short fails, that I can stop and reverse and get long right there. So that would be the argument that if I get short right now at A, then my risk box is this, or I could wait to see, do I want to get short at B, C, D, E, F, or G? If I get short at F or if I get short at G, it's because I think I could take the range stat and this thing is going to go off the chart with failure. So G is still a good entry, by the way. And by the way, if I get short at A, G looks like a reasonable place to put a second position because now this support level will have failed. So I'm not going to put a second position on this until I see this massive support level, which prompted that move. If this thing fails, if that breaks, then I'll put a second position on and it's going to be a huge win. So now I'm just talking about the tactical trade here. In the chat, where do you want to get short? A, B, C, D, E, or F? If you want to get short, you know. So I see some for me, the skin of the dragon is kind of like the official exit for when this R10 rolls over. So if you're feeling what the rock is cooking, then this is the reasonable exit at 2, which is also, and then I could decide at B. I might want to wait for D and let it get through the dragon, and then I can put my risk box like this, and then I still have 1R to the base and then 2R to the test. So in my view, I think I would do short it. I would exit. I'm going to have my stop at B, but I will get short at D because I want just that little bit of extra momentum. Check or hold. That's just one way to play it. And those are the real choices that you have. Now, it took about 6 minutes for me to talk us through 2 trade frames. One of them was how to exit this trade and then what to do with that trade. Now I'm going to, and also where to get long, right? So now my final decision is if I do exit here at D, that means price would have done this, but then it doesn't fail and starts going back up. Where am I going to get long again? At the peak of the RL10. So my actual if I'm going to put my stop here at the skin of the dragon. But then if it breaks through the top of the RL10, I'm going to get long right here. So my stop is going to be here. I will re-enter here. And then if it does break through this one, I'll make sure that I'm at no lose plus dinner for 2. And now I can get this entry instead of this entry. But if you decide not to get long here, then you have to get long here because you made a new high of the day and you have plenty of room to the upside based on the low of the day plus a range stat. So now we just made a complex set of decisions for this trade about what to do in the 3 minutes that it takes for that bar to form. I should be able to recreate that entire conversation in my head and with sketching on the screen because I could do that at the speed of thought and not at the speed of the spoken word. So my trading plan is exit here, short here, second position short there. If this hits, then my re-entry would be here, and no lose plus dinner for 2 if price gets through there, and then a second position at the 2R battle drill. Check or hold. That took 20 seconds for me to say it. And you've got to render that into a battle drill so that in 20 seconds, let's say it takes me 30 seconds to decide what to do with an open trade. And I'm trading on 3-minute bars. How many decisions like that can I handle in a 3-minute bar? 4. Because it takes me 2 minutes, 4 times 30 seconds. I can do all that routinely in 2 minutes and have a 30 seconds on either side of it to sip my coffee or whatever. And remember also that, we're looking at these price levels all the way up. So that's not the first time we've ever thought of that. And what I'm doing is I have planning norms, and I can see price levels, and I got my indicators on there that support that kind of decision making. PSAR exit routinely. Fair enough. Gave it a chance. There was no more upside to it. So now I got to decide where I want to get short. I have a long side bias as long as price is north of that Bollinger Band mean. I have a positive bias. Actually, a double bias, I think, because the VWAP the VWAP is right here. So as long as we're north of that, I have a positive bias. And the Bollinger Band mean is north of that, so I have a double long bias. So that means the first thing that I want to do is be able to re-enter if it takes out the peak of the RL10, because the 30 period regression line is still sloping up. So there's still some residual strength on this. Now, this is where the 10 ran out of gas and then crossed below. So that's a P1. So that means this is leg 1. Now this is to the peak, that's leg 2. From our entry to the top of leg 1, that's how much power leg 1 had to get above the VWAP. And then leg 2 only added that much strength before it peaked and then began to descend. So it feels like it's running out of gas. Check or hold. And plus we're into this some distance and some time. So now I could think about, maybe I want to get short if it violates the Bollinger Band mean, with the idea that I'm front running getting short at the VWAP, and I want to get short if it breaks below this. So there's 1, 2, 3 places I could get short. Now I'm going to say that as you could also decide to get short here if you wanted. So maybe I will call that 0, 1, 2, 3. Where do you want to get short if you want to get short? If you would get short, where would you want to get short? 0, 1, 2, or 3? Yeah, I think I would think 2 for sure. Like if I don't get short at 0 or 1, at 2, I think the move is it's going to come back to here. And if I got short here, I could make money on that trade. And then if it failed below here, I'm adding second positions here. So to me, I have to get short at 2. And then it's a question if I want to get short at 1 or 0. I don't want to get short at 0. I'll get short at 1. And part of that is I'm now thinking we've had 2 days of downward pressure. This is the 3rd day of downward pressure. So this thing could fail. But today we had upward pressure. So so I'm not ready to get short yet. I think at 1. And I actually got short at 2. And oh, by the way, this is where mistake. Hey, we're having really bad sales in the Middle East because people are being fooled by news. Oh, well, that's not going to change much. So the bottom starts falling out of this. When it crosses the VWAP on that news event, so I exit here routinely, wasn't ready to get short, got short here on the news alert, and now this thing is dropping like a stone. So that one position, getting short on the the VWAP crack, and then it broke through the support level. Look what it did in this bar. It went all the way down, all the way up, and all the way down, and then started coming up. I exited at this, I drew that poorly. I got out in that. It's actually, this exit is in here on this bar. I drew it improperly. That thing ran all the way down to here and started to reverse. And when it moved two boxes off the low, I get out here. And that little mistake let me keep 4R, and I gave back 2. And it wasn't done, but I was done trading it because this one bar went from here. This is where I got out, and it ran all the way back to here, and then it failed again down to here, and then came back to here and here. So I wanted no more of that. That was enough for me. And then this settled down a little bit here. Came back all the way to here, closed. So now I got a low, a higher low. The R10 is starting to reverse. Ah, there's the skin of the dragon. This thing has now, this bar has closed here. I take that trade now. Now the smoke is cleared. I'm willing to take this one with my stop here. And I'm aiming for the VWAP and the Bollinger Band main and the high of the day in case this was an overreaction. Check or hold. So now if I want to get into the 0 state, I got to do this. Now that I know where those reasonable prices are, I got to do that. That just looks like a big gap down and a reversal. 1 hour loss. And that was enough. I used, I earned 4 as a gift, put 1 back on, and it cracked on me right away. And I stayed too long and got a bad fill and gave an hour back. So 3 the usual way, plus 4, 7, minus 1, 6. Sniper trade of the day. Opportunistic trading. Standard work for abnormal times. This was standard work for normal times. This was standard work for abnormal times. So that's what McDonald's looked like today. And it started off the day just like any other day in Whoville. Nice tight little range compression, orderly breakout, which we traded in the usual way, managing our little trade, and then shazam, just that fast, the world changes. And you get this into here, collect 4. Try again on a return, failed, take 1, be done. So do you think McDonald's is in play for tomorrow? It sure is. Sniper trade of the day. Second one, just for fun. Which way are you feeling this is going? I mean, I'm obviously betting on the short side breakdown. We had a nice tight, but with general downward pressure. Bollinger Band mean, PSAR fell through the bottom. This is collapsing dragon all day. I anchor that box to the PSAR. So there's my 1 execution risk, checker hold. Now, when I zoom in this much, I can really see what's going on, but I lose some of the scale of what a range stat could be. The move in McDonald's was a range stat move. That 6R move to the downside, that was just a range stat. So when I'm zoomed in this close, sometimes I can lose sight of the fact that maybe this is only 1/10 of how far this thing could fail to the bottom. And I might lose sight of that. So sometimes I like to look at different time frames. But this one has collapsing dragon written all over it. It's even cleared that one. And I've anchored my execution. This is the price that tells me that move is over. Is this speculative move has failed if this reverses right away and then comes through the VWAP, because now this feels like an SSC, and I would be thinking about getting long, and not later than the Bollinger Band mean. So that's where I'm thinking long. So this is all the open risk I need to have from the technical context of that trade. So that's 1 execution risk, an XR. Standard work. Notice how important and useful the RL10 as price is. It gives you a very clear signal to here. That's where it turns, which tells me instantly if this price fails, I gotta be short again as a collapsing dragon. Check or hold. The PSAR is here. The Bollinger Band mean and the VWAP are there. And now this is where the R10 turns. That means I'm getting out at the skin of the dragon now. I didn't get out here at the skin of the dragon because the R10 was still signaling down. This is just the first noise move, and that's the second surge down. So that's the R10 is the price in this model of thinking. Check or hold. Now the PSAR flips and the dragon has rolled up. So I'm using the same MMRB conceptually here, right? That size is this size, but I'm going to exit right here. Like if this goes below the R10, I'm being short right there. So the actual risk I'm taking is here, but I'm not going to get a larger position size because my execution risk is smaller. I'm still using this as a 1.0 execution risk, but I'm actually committed to getting out right here because I want to get short on a collapsing dragon. Check or hold. My upside move is to the Bollinger Band mean and the VWAP to yesterday's closing VWAP. So that would be a target to the upside. This is, if that's my execution risk, 1, 2. This is where I'm thinking about the 2R battle drill. It fails at the Bollinger Band main. I take a micro gain or basically a scratch. Gave it as much as I could. Nothing. Trying the Kata 2 again. Failed for half an hour. Now I'm short because this time it tried to test, couldn't get through. This time it only got to here. This is getting weaker, and now it broke through the collapsing dragon here. Now I want to be short. And my risk box is here. Check or hold. Second position. Standard exit towards the end of the day. That's about 3R. This one is in Walmart. And maybe this is moving in sympathy. This is all happening when I think the Mc mistake happened around in here. But that's just more failure in Walmart. So you make about 1 here, scratch, lose a half, make 3. So about 4R on that one. Only one chart posted today. This is AI from George. He gets short on the collapsing dragon. I like that. It reverses immediately. I think you got to get out here at the PSAR and not here. So that should be your exit. This one, I don't mind that. I mean, you let it get across the VWAP and now it's going. This, it rolled over and failed immediately. When it hits the VWAP, I'm out. You stayed out of the chop. Took a couple quick shots on the long side. This second one, not really in favor of it. You're in the middle of the lunch period. I might not take that one. I like this one because you cleared that hump. This shows actual evidence of strength. It just didn't follow through. So I would maybe I think you could trim some of those little fractional losses, not take that one. But that's just about all there was in that one today. There just was not another case of AI not moving. So no problems with that. Here's our 150-day look back. This is that orderly move. So here's that move off the low at the in November and then December. So this is where our price action was today. This is the bull market and this is the dip. So this is the buy on dip opportunity we're going to see in like channeling and the overreaction system. That's enough of a pullback to bring in the value hunters to buy on dip. So we'll see if on Friday they're willing to push that higher. We don't know anything until it really gets above here. And then it's on to the all-time high, which is right about there. But if this fails at the Bollinger Band mean tomorrow, then it's down to here. So we'll see. This is a really strong resistance and support level because that connects to here. You know, when this made that run up into this, it took that much time to persuade people there was another leg up. And when it finally broke, it broke hard. That was the surprising motion, the surprising move. This is the one that we thought was going to fail. But it surprised us with this move. And now here's the orderly pullback. Now let's see what it's going to do. That's a compound critical state. Now the zooming in, just looking at the last 30 days is the black box. You can see this in retrospect. Today was a very bad close. And now we're really close to the Bollinger Band mean on the daily. That's the end of that whole move. And now here's what the 30-minute looks like for the last 5 days, 10 days. It's testing. It has now erased all of the good feelings of the low volume last week of the holiday season. This is a test of the emergency guts system, I guess I call it. So where are we? Bullish normal, short-term weakness. All of the channeling and overreaction strength leaders are firing. Volatility is favoring short, sharp moves. You've got some good auto framers set up. Big up move in Merck was positive. Apple sold off for another day. There's a value play there. Lots of the ETFs are now firing on the auto framer. Plenty of auto framers to choose from that are better than 2-1. Nike is 14-1. The Russell and the mid caps are 5-1. That's really good. And even XLK, the tech area, 4.5-1. That is going to look like the entry of the year if that works to the upside. That's how good that's going to be. Bunch of squeezes. Mostly tactical selling today. Merck was the big exception. And the usual suspects for trading value list, marijuana, Tesla, all looking pretty good. All right, fellas, that's everything for today. We'll get it published and posted. I'm going to add the bar by bar discussions from yesterday and today. I'm going to drop that into the bar by bar workshop. So if you have already purchased that one, that's a lifetime course as well. And there's a couple hundred case studies in that one already that goes through that level of excruciating discussion. So if you find that helpful, then long term, I think you want to add the bar by bar workshop to your toolkit. Take good care, and we shall see you tomorrow. Tactical Friday.